Hey everyone, welcome back to Corporate Decoder. Today, American Healthcare REIT just filed an 8K revealing they are selling more shares to fund acquisitions, and I see a key detail that could impact future share prices. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are essentially raising more money by selling stock. And the way they are doing it gives them flexibility, but also introduces some interesting dynamics for investors. So what is happening here is American Healthcare REIT Incorporated is updating us on a previous stock offering. Remember, back on the 12th of August, they closed a public offering where they sold a bunch of their common stock. Now, on the 20th of August, they've exercised an option that the Underwriters had. Think of underwriters like the banks that help companies sell their stock to the public. They had the option to buy even more shares if they wanted to. And on the 20th of August, they decided to buy the maximum amount allowed. This filing tells us about new agreements called forward sale agreements. It is a bit like a pre-sale of shares, but with a twist. Instead of getting all the money up front, the company agrees to deliver shares at a future date. In this case, they are agreeing to deliver an additional 1987500 shares of their common stock. This agreement is with Morgan Stanley and Company LLC, Citigroup Global Markets Inc., and KeyBank Capital Markets Inc. They are acting as forward sellers here. Essentially, they are agreeing to buy these shares from American Healthcare REIT in the future. Now, here is where it gets interesting. To manage their risk, these forward sellers borrowed and sold these shares on the 24th of August. This is a common practice to hedge their position. It means they are trying to lock in their potential profit or minimize their potential loss before they actually have to deliver the shares to the company in the future. The company intends to deliver these shares to the forward purchasers at a future date, no later than the 10th of August 2028. The price they will get for these shares is based on the original public offering price minus any underwriting discounts. And what are they doing with the money from these future share sales? They plan to contribute it to their operating partnership. This money is earmarked for a pending acquisition of senior housing properties, as well as other potential investments and general company needs. This shows a clear strategy of growth through acquisition. Looking at the company itself, American Healthcare REIT is a real estate investment trust that focuses on healthcare facilities. Their market capitalization is quite large, around $12.2 billion, and their stock has been trading in a decent range over the past year. Major institutional investors like BlackRock and Vanguard hold significant stakes, which generally indicates a level of confidence from the broader investment community. The shares we are talking about are their common stock, with a par value of $0.01 per AHR. These are traded on the New York Stock Exchange under the ticker symbol HR. This confirms that their common stock is indeed registered and traded on the New York Stock Exchange. This entire event stems from a prior offering of 13.25 million shares. The underwriters then exercise an option to purchase an additional 1.9875 million shares, effectively increasing the total shares issued in that offering. This is a significant amount of stock. So the underwriters who initially helped sell the stock were given an option to buy up to about 2 million more shares within 30 days. They decided to exercise this option in full. This means more shares are being made available to the market. The key takeaway here is the company has flexibility. They can choose to settle these agreements by delivering actual shares or by paying cash. However, the timeline for this settlement is up to 2 years out, August 2028 at the latest. This allows them to manage their cash flow while still fulfilling their obligation to provide the shares. These additional shares were offered under a shelf registration statement. This means the company had pre-registered a certain amount of stock that they could sell over time without needing a new registration for each offering. It is a way to streamline the process for future fundraising. The actual legal agreements detailing these forward sales are attached as exhibits to this filing. While we are summarizing here, those documents contain the precise terms and conditions. Now let's look at the big picture for American Healthcare REIT. This move is about raising capital to fund acquisitions, specifically in the senior housing sector. This is a growth strategy which can be positive for a company's long-term prospects. However, the method of raising capital through forward sale agreements introduces some complexities. The fact that the company is using forward sale agreements suggests they want to lock in a sale price for these shares. Now, even though the actual delivery and receipt of cash will happen later, this gives them a degree of certainty about their funding, but it also means that if the stock price were to rise significantly between now and 2028, they would be selling those shares at a predetermined, potentially lower price. It is a trade-off between certainty and potential upside. Looking at the overall context, American Healthcare REIT is a substantial player in its field. With a market cap over $12 billion and significant institutional backing, they appear to be a well-established company. This filing is not a sign of distress, but rather a strategic move to expand their operations. The risk for investors is primarily around the dilution of their ownership stake as more shares are eventually issued, and whether the acquisitions funded by this capital raise will indeed be successful and accretive to earnings. What I am actually looking for is how these acquisitions perform, and if the company can continue to grow its income streams effectively to offset the dilution from these share issuances. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.